Everybody, this is Jim at SP500chart.com. It's actually Saturday afternoon, a little bit before 2 o'clock. We're going to do this video now because I've got a little time to think about it, and I'm going to be busy tomorrow. Before we take a look, let me remind you the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, we're starting out here on a 15-minute chart looking at the S&P 500. I did a video in the mid-morning yesterday because I wanted to point out that the gap down that we saw at the open yesterday was underneath an already incredibly steep descending line of support. And my feeling was, and this was about right here, my feeling was because we gapped underneath that line of support that we might be seeing a short-term bottom form here. And that idea was solidified a bit as that was the low of the day, and we closed very near the highs of the day. And also back inside this channel. I'm going to extend that down there. So at one point in the week, I thought this might have been a descending wedge, and Wednesday we got over that. Thursday we back tested that line, came right down to that apex area, which if you know much about wedges, you know a lot of times you back test that apex spot. Then Friday just seemed to be totally off the hinges. And I think there is some sign here that that we're starting to maybe put in a bottom. Obviously, I can't call that because we're not even over this line of resistance yet. But this strong move underneath descending support, and I'll add steeply descending support, sort of makes it look like that may be the case. We'll know more as we get into the first part of next week. I want to say something real quick about the coronavirus, if you don't mind. The death rate in China has been just a tad over 3%. We just had the first fatality in the United States in Washington State. And this is, I think the fear here is because this is a new thing. It's not understood. We don't know if it's going to be really bad, if it's going to be somewhat bad. I will throw this out to you, though, for comparison. In 2 months, I think about 2,800 people have died worldwide. That's in about 2 months. Every year in the United States of America, between 17,000 and 41,000 people die of the flu. And of the people who are hospitalized in the United States with the flu, about 7% die. Compare that to a little bit more than 3% who are dying due to the coronavirus in China. The question you have to ask, though, before if you're comparing apples to apples or if you're comparing oranges to crescent wrenches, is this. Are the cases that are being hospitalized in China sort of a parallel to the influenza cases that are hospitalized in the United States? I can't answer that. I don't know how many people are in the hospitals in China because they're really ill, and I don't know how many people in the countryside of China have what they think is a cold and they actually have this novel COVID-19 coronavirus. Just food for thought. So here's the S&P 500. Looks like a sign of maybe a bottom, as I mentioned. if we look at a couple of other charts here, for example, we could bring up the Dow Industrials. Same thing. This green line, by the way, I think I'll go even back to a weekly. That green line goes back a ways, and it looks like for now we may be holding up on that. Of course, there's another line of potential support down here. The Dow had also made what looked to be an inverted head and shoulders pattern, and where we closed was right at the bottom of this part of the right shoulder. Where it bounced was right at the bottom here. So, you know, this is probably the worst looking chart of the bunch. If we then look at the NASDAQ, here's the NASDAQ. Doesn't really have an inverted head and shoulders pattern, but there is the line that we're looking at sort of in the S&P as the neckline. You'll see that zooming in on that, that's exactly where the NASDAQ bounced yesterday. Exactly. So, interesting stuff. Of course, the NASDAQ is also up here near where you would expect resistance. So I think the handwriting on the wall here is probably that the best case scenario would look to me is that the NASDAQ is destined to go sideways for a bit. So anyway, going back to the S&P, let me bring it up here. I have to scroll around over here off screen. There you see this was the blue line that we've been talking about here, and this is a longer, a different version of a potential support line right there. Obviously, I would rather we stick here. I want to point out one more thing real quickly. I mentioned this to subscribers. Back when we were looking at this smaller inverted head and shoulders pattern, we broke out. We formed sort of a little bit of a rising wedge. And then what happened? Well, we came back under the neckline. You remember, that's when I made this little pink box. And that pink box was basically saying the deeper we get into that red or pink zone, the more uncertain the validity of that inverted head and shoulders pattern becomes. So look at the picture here. Come off the bottom of the head, right shoulder, part of the right shoulder forms a rising wedge, breakout, back test, then we get a little deeper. Then we break out again, and obviously here just a week ago made the target from this inverted head and shoulders pattern. Now let's look at this inverted head and shoulders pattern. We break out, sort of form a wedge, not as obvious as a wedge. Well, actually, tell you the truth, if I went here and instead of drawing it there, if I went there and did that, you could say, yeah, that's a wedge. We just kind of got back inside of it for a bit. So this wedge would correspond to this one. To help that correspondence a little bit, let me just make that blue so that, again, it'll be a little bit more apples to apples and not bowling balls to marshmallows. So here's that, there's that, and then we had the return back to where that wedge started to form in this pink area. Where did this wedge start to form? Well, let's zoom in just a little bit. Started to form at 28.55. What was our low yesterday? Our low yesterday was 28.55. Okay, wedge started to form at 28.55. Wedges like to bring you back to where they started to form. What was our low yesterday? 28.55. So, just for the heck of it, it was 28.55.84. This point over here was 28.55.94. So it was 1/10 of a point difference from where that wedge started to form to where we bounced yesterday. That's interesting. However, I will throw this out. We have that death in Washington State. They're going to do a news conference at 1 o'clock their time here on Saturday. And I can't really tell you for sure what that's going to do to the markets. I just don't know. I do not know. But technically, it looks like we've come down to an area where there are some reasons to look for support. So let's just, what can I say? We ride with it, or you do what you got to do. I do what I got to do. But I almost feel like apologizing. But how could anyone see this? I knew that once we reached that 3370 area, maybe we find a little resistance there. But this coronavirus has really done a number here on the markets. So let's just keep watching it together. Thank you for your patience. Thank you for your time. And as always, thank you for your very kind support. Take care.